Welcome to The Explainer. Today, we're diving into a super counterintuitive investment strategy that the ultra-wealthy use. It's all based on the insights of entrepreneur Dan Martell. And here's the kicker. It turns out that the way most of us are taught to invest is pretty much the exact opposite of how they actually build their fortunes. Okay, so let's just jump right in with a quote that basically flips the table on everything we think we know about building wealth. Right, the conventional wisdom is always put your money in the S&P 500, buy a rental property. But what we're going to learn today is that for the truly wealthy, that's actually the end of the journey, not the beginning. So that begs the obvious question, right? If what we all think is the right way is actually wrong, then what is the right way? Especially if you're starting out from scratch with, little or no cash to play with. Well, it turns out there's a very clear step-by-step path. So here it is, the four-stage journey that kind of flips the traditional model on its head. Think of it like a ladder. You just can't skip the rungs. And it all starts with the one thing you have complete and total control over. Let's start with that first rung, stage one. So, stage one, your foundation. This is all about investing in you. Before you even think about putting a single dollar into the stock market, the first, absolutely non-negotiable investment is in your own physical and mental health. This is the bedrock. Everything else is built on top of this. And this quote it nails it, doesn't it? It's the perfect way to understand why health is the absolute baseline. If you don't have your health, no amount of money in the world matters. Your body is literally the vehicle for your entire life's journey. And if that engine isn't running well, you're not going anywhere. So what does this actually look like day to day? Well, it means the obvious stuff, focusing on fitness, really optimizing your sleep, and dialing in your nutrition. But there's a really clever hack here too. Join an expensive gym. And it's not just for the fancy equipment, it's for the people. You get to surround yourself with other high achievers. Proximity is power. Okay, so once that foundation is totally solid, we move on to stage two. This is where you really start to see the financial returns kick in. It's about investing not in stocks, but in your skills and your knowledge. It's about buying better thinking. The core idea here is that paying for compressed knowledge, basically a blueprint, is the ultimate shortcut. I mean, think about it. Why would you spend 20 years trying to figure something out through trial and error when you could just pay an expert who's already done it to give you the cheat codes? This is how you become more valuable, way faster. Now, this is really interesting. The wealthy focus on what's called just-in-time learning. They don't learn stuff just in case they might need it someday. No, they acquire the very specific skill they need to solve the problem that's right in front of them today. And that makes the return on that investment immediate. And here's a super tactical way to do this. Build what's called a Centurion Council. It's basically your personal board of directors, 100 advisors you're learning from. You start by just consuming all their free content, you test their ideas, get some results for yourself, and then, only then, do you maybe reach out to connect. And when you do finally reach out, you use something called the PAC script. This is not a cold email, okay? You lead with proof. Proof that you're an action taker who has already gotten results from their advice. That one little shift totally changes the game and makes sure your message actually gets noticed. All right, let's move on to stage three. This is all about reinvesting in the single greatest asset you have for generating cash, your primary business. This is the engine of wealth creation. Forget about a 7% return from the stock market. We're talking about a 50% or even higher return from your own company. And this isn't always about big, huge strategic moves. A lot of the time, it's just about buying speed. Upgrading a slow computer, that's an instant productivity win. Buying a proven marketing playbook, that saves you months of guesswork. And, this is crucial, investing in coaching for your team leaders so the whole organization gets smarter, not just you. Now, this is a huge mindset shift. The main reason you hire people isn't just to grow the business. It's to strategically buy back your own time from low-value tasks. This is what frees you up to focus on the handful of things that are actually going to move the needle for the entire company. And a super simple way to do this is to just earmark a fixed percentage of your profits, say 20 or 30%, every single quarter specifically for reinvestment. Then you take that cash and you aim it directly at the biggest bottleneck in your business, whether that's marketing, sales, whatever. Okay. So, only after you have mastered the first three stages, your health, your knowledge, and your business, only then do you finally arrive here at stage four. This is the big reveal. This is where traditional investing finally enters the picture. So here's the most important point of this whole thing.
Stocks, index funds, real estate, they're treated as a safety net. Their job is to preserve the wealth you've already created. They are not the tool for creating it in the first place. Making money is one thing, but keeping it is the hard part. This stage is all about keeping it.
And the data is really clear on this. Huge fortunes are almost always built by having a successful business first. It's only after that business is throwing off a ton of extra cash that the money gets put into passive financial assets for that long-term protection and compounding.
The ultra-wealthy then use these incredibly powerful tax-efficient strategies like buy, borrow, die. It sounds kind of crazy, right? But they buy assets and they never ever sell them, which means they never pay capital gains tax. Instead, they borrow against that portfolio to get cash, and since it's a loan, it's tax-free. Then, when they pass away, a life insurance policy pays off the loan. It's pretty wild.
So there you have it. That's the 4-stage playbook. It's a really powerful framework, but I get it. It can also feel a little overwhelming. The key is not to try and jump to stage 4 overnight. It's just about figuring out your very next step. Right now, wherever you are. Look, no matter where you're at, you can start building this habit. Here's a simple way to think about it. Maybe 10% of your income goes into long-term savings, like an index fund, just to build a base. Maybe 10% goes to giving back. But the most important bucket here is the one on the right. You need to decide what percentage are you going to consciously reinvest in yourself. Honestly, if you take away just one thing from this whole explainer, let it be this. Your skills, your knowledge, your health, they are your greatest appreciating assets, period. They are the foundation, the leverage, and the engine. Everything else gets built on top of that. You are always your best investment. So let's forget about the 4 stages for just a second and focus on one thing. After hearing all this, what is the one single action you're going to take? Are you going to schedule a workout? Are you going to finally buy that book you've been putting off? Are you going to identify one person you can learn from? The whole journey, it just starts with one commitment. So what's yours going to be?